Central Bank of Nigeria has just reduced interest rates from 27.5% to 27%. What does it mean for our investment portfolio in 2026? In this video, I want to talk about four stocks that I have strategically positioned my portfolio in ahead of 2026. Welcome to Coach Oge. This is the first time you're watching my video. Kindly hit the subscription button and turn on the notification bell because right now I want to tell you how I have reshuffled my portfolio and what I'm currently doing right now to make sure that I maximize 2026 trend in the stock market. So here I want to talk about top Nigerian stocks to own in 2026. Get in early before the big players. You know, one of the advantages you have as a retail trader is that you can make swift decision. You can quickly take decision and execute them in the stock market. But the big players, they need time. They would have to call for meetings and then approvals. You see those time that they are taking to decide, reshuffle, plan what to buy. You are already positioning yourself ahead because knowing what they are going to buy would help you to a very large extent benefit from market trend in 2026. Now, right here, I am going to mention one stock you should focus on because this is my YouTube channel. So I usually give out a stock on my YouTube channel. Sometimes I could do two, sometimes I could do one. Now, the rest of the stocks are on Glofolio platform. My Glofolio members have exclusive access to all the stocks that I am buying for 2026. There are four solid stocks. Now, I don't just go to the market and pick random stocks. It takes time for me to come up with stocks to buy. I match a lot of events, trends, carry out analysis. Most importantly, I look at charts over a 12-month period, meaning that whatever I'm seeing on chart on that stock, there is a strong tendency that the stock will continue to go up in the next 12 months. So one of my biggest decision driver in deciding what to buy for the new year is charts. Because when I look at charts, I'm able to see stocks that are attracting huge buy demand. I'm able to see stocks that are in a solid long-term uptrend and then key into it before they move. So my usual disclaimer, the ideas shared in this video are based on my personal research and calculation. Kindly do your due diligence before you invest in this particular company stock. And also note that the stock market comes with a lot of risk due to uncertainties, and make sure you vet my recommendation based on your risk profile. This is very, very important. So let's do a recap of what I recommended in 2025. Now, when you go to Glofolio platform, you see that in November 4, you can see here, November 4, 2024, I recommended 6 Nigerian stocks to own in 2025. 6 Nigerian stocks to own in 2025. That was November 4th. Like I said, I usually recommend New Year stock before we close the current year. Because one, I like to get in early. You know, at the end of the year, most of these fund managers are expected to reshuffle their portfolio. They're expected to look at how they are performed. Some of them might reshuffle based on certain trends. So for you, if you are smart, you don't have to wait till the end of the year to reshuffle. All you need to do is to look at the kind of stocks they'll be buying based on macro trends. These guys have invested a lot in data. You don't have to compete with them. Rather, think like them, trade like them, and deploy your capital like they do, even if you don't have the type of capital that they control in the market. So this was 6 Nigerian stocks to own in 2025. So let's quickly look at the 6 Nigerian stocks. Like I said here, in 2025, I recommended these stocks. The first one was Lafarge. Lafarge stock was selling for 38 naira. Lafarge Wapco. Lafarge Wapco was selling for 38 naira. That was around this region. And then you can see what happened. The stock rallied from 38 naira to 122. I used the market close as at yesterday. I used the market close as of yesterday. So meaning that if you had keyed into Lafarge Wapco when I posted it as a stock to buy 38.4, you would have closed your portfolio at 217% return between that November and today. So I don't know what will happen next. Maybe if you continue to hold them, price could still go up or it could come down. But I'm just trying to compare performance from the time I recommended the stock and now. Now, if you jumped on Transcorp Power at 314 naira, Transcorp Power at 314 naira. So let's look at Transcorp Power. So Transcorp Power at 314 naira, your portfolio would have been down by 12% because the stock is down to 314 naira. So, well, in the market, you can't always win. Do you understand? That's why whenever I am looking at my portfolio, I look them from aggregate balance, not by trying to um, make sure that each of the stocks I bought go up. No, I like to see as long as the overall portfolio is going up, I'm okay. What makes you profitable in the market is as long as the number of winning exceed your losses. Then, just like in business, revenue minus your expenses. So your revenue are your gain, your expenses are your loss. So your gain minus your loss to give you a net profit. So you are still better off. Now, the third stock was Sky AVN. Sky AVN was selling for 27.5 naira. Sky AVN, the same period. So here, Sky AVN was selling for 27 naira, and then you see what happened. The stock shot higher to reach 90 naira. That was 227% return from that time to date. That's Sky AVN. Unilever was recommended at 24 naira, and Unilever shot higher to 73 naira, which is 204%. Let's look at Unilever stock. Unilever stock. Now, the number of stocks I recommend for the year is not fixed. It depends on what is available at that period. So it doesn't have to be six, it doesn't have to be five, it doesn't have to be four, it doesn't have to be three. It could change. Like for 2026, we have four because that's what the market is presenting. And I'm looking at strongest stock from my own analysis. So this is Unilever. Early this year, you can see around 24 and then 24 into 73. You can see right here. So that's 204% from the time I recommended it up to date. And then Ikeja Hotel, 8.2, and then it topped 20.7. Let's look at Ikeja Hotel. Ikeja Hotel, 8.2. So early this year, that from November, yeah, this is it here. You can see here, and then look at where it's 20.2, even reaching a high of 22. So that's 152% return from the time I posted it up to now. And then the last one, Transcorp Hotel, 106 naira, and then it topped 164. That's 55%. Transcorp Hotel, Transcorp Hotel. So you see from November right here, you can see from 106 to top this here. Now, these are the stocks I recommended. Now, why did I recommend these stocks? Now, they were based on certain macro trend and events within that particular period. And then, for example, if we look at Sky VN, these guys, I usually see this company as one that ranks at the same level with NACO, and they enjoy what I call duopoly. So, and then they are not battered by FX. Like this guy has what we call, they enjoy pricing power. If they decide to increase their rates per kg on cargo handling, whatever, you still use them because we don't have much of them in that particular industry. Then if you look at Lafarge benefited a lot from improved sales and management ability to manage debt. You know, in Q2 2024, I can't forget before Lafarge stock blasted higher, the company reported a massive growth in finance costs, and because of that, their bottom line dropped. So for an amateur or someone who doesn't understand stock or who thinks that everything starts and ends with financial statements, the person would have sold. In short, the stock even tanked within that period. And I told everybody in Glofolio that no, this is not a bad move. If finance cost is increasing and debt, borrowing is dropping, then it means management is deliberately cutting down its exposure to debts. That these guys are doing this intentionally. And the following quarter, the company released a massive result. And look at where the company is selling from right now. The company stock 122. Unilever steady gains. In short, people that joined our early entry on Unilever was even 15 naira. If you join our early trader course in June 2024, our first entry on Unilever was 24, 15 naira. In short, my call on Unilever and UACN were at the same period. So UACN around June, July, those that joined our early trader course, which is around this region here, you can see 15 naira UACN, and then if you check Unilever to they were also selling around. So meaning that if you had actually been a member of Glofolio early enough, your entry on those stocks, you can see it right here, around 15 naira. This was where I placed the first call, but then I also saw that this stock had huge upside potential. Now, Ikeja Hotel was a no-brainer because one, apart from the fact that it enjoys a lot of patronage during December period, seasonal, this company also indirectly benefit from increasing inflationary pressure, especially jollof rice index, because by common sense, when you go to the hotel to eat, most of their foods are sold at premium pricey, so they benefit a lot from food and beverage. And then room booking is also one major driver of their, and then there are not much of those kind of premium hotels like listed in the Nigerian stock market. So it was also easy for me to look at Transcorp Hotel, almost the same thing with Ikeja Hotel. And if you had bought all these stocks, at least if you look at it on average, your portfolio should be up by more than 100%. You'd have outperformed the Nigerian stock market, you would have outperformed inflation, and you would have also beaten exchange rate. So in buying these kind of stocks, you need to be strategic. There were two major macro events that made me buy into these companies. Number one was inflation. Yes, inflationary pressure. So I was not just looking for stocks to buy. I was looking for stocks that benefit from the current macro trend. I usually say this, that if you want to survive Nigerian economy, you must move from complaining to asking yourself who is benefiting. Understanding sectors, quarters, or segment of the economy that is benefiting can help you to start a business in that particular sector, as well as invest in companies in that particular sector. So that's inflation. Second one was exchange rates. Now, in 2024, 2023, 2024, exchange rate pressure was very high. You saw the whole naira to dollar shooting high, dollar to naira shooting higher, and then a lot of companies that were relied on USD to finance imports, actually input costs, they suffered. And then I think these guys also were not little exposed. If you look at my write-ups when I posted these stocks, some of the things I talked about are companies that are not totally exposed to exchange rates, companies that will either benefit from exchange rates, inflation, and are not exposed to exchange rates. And then you can see we entered around the October, and then from mid 2025, there about exchange rate started cooling down. So these are the things I looked at before. I usually host monthly webinars. So when I talk about these stocks, there's no way you wouldn't have heard me mention these stocks many times in the past as a member of our portfolio community. Now, my selections were based on companies I think would benefit from rising inflationary pressure amidst an elevated exchange rate, which was around 1.6 to 1.7. Second, these stocks were beaten down before they recover significantly. I cannot stress this enough. For those that are in my community, I usually tell you that I don't chase stock. I don't chase stocks. I don't FOMO every now and then. Yes, there are times when you could FOMO on a stock. If I want to FOMO on a stock, I must be sure that this company is not just selling at the top of the market, but still the value. So that's where I look at how to buy high and sell higher. So I like to buy my stocks at the bottom of the market. This single strategy alone has accounted for major gains that I've recorded in the Nigerian stock market. It's a no-brainer. It's timeless. Don't chase stock. Allow stocks to come to you. Even if you have some of your money in your wallet balance, it is not compulsory. It's not a must that you have to enter the market every day or the moment you fund your account. There are times I fund my account if I have spare cash, but I'll have to wait for like one. Sometimes I have to wait for like 1 week, 2 weeks to wait to buy to get a new buy signal, because I understand the power of buying at the bottom of the market. You make more money in the market waiting, and when you buy a stock, you also wait. So you realize that the bulk of the time you need in the market to make money is actually in waiting, not necessarily you clicking buy or sell. Now, let me share our newest project. Now, we have a new project, in a new feature on Glufolio website, and that's called Glufolio Today, and it's available to everyone. Now, as an investor who has his or her money in different quarters, either in the stock market, either in the fixed income market, whatever market. Now, as long as you have your money invested somewhere, it's important for you to keep tab on what is going on, how certain news and certain market news or business news can create opportunities, or also alert you on when to stay off certain investment and all that. So I recently launched a new website that lets you read all the business and financial news headlines from leading Nigerian newspaper on one page. On that means right from one page, you can actually see all the market headline, business news, and financial news, and it's called glofolio.com/today. So glofolio.com/today automatically pulls latest business, economic, and market news that moves your money on a single page, so you can quickly see the news that matters to you and your investment portfolio. So when you go to glofolio.com/today, which is it here, this is it here, glofolio.com/today, you will be able to see all latest news. You can see right here. So this news has pulled automatically. It's just news headline. So meaning you don't have to be going to Nairametrics, Business Day, Daily Trust, Punch, Leadership, Daily Nation, this day, like different business news, leading newspaper. You don't have to go to this paper, because yes, you might find one news. A lot of us love one sort of one particular paper over the other. But what if the news that moves your money or that will provide opportunity is actually on another paper that you don't read? So you don't give preference to one over the other. Rather, you find a way to combine them together, so that at the end of the day, you can actually be ahead, you can be updated, because it is the person that is updated in the market that knows where opportunities are. So this is where glofolio.com/today comes in. So we give you access to today's business news. Today's business news. Like right here, you will see these are latest news from today. And this particular site runs a check on all these news headline every hour. So if there's a new headline, you see them right here. You can see these are business news. You can see right here. 25th, Naira appreciate massively against US dollar in the black market, highest in 15 months. Polaris Bank faced it, and then you'll be able to see the source: Daily Trust, Daily Trust, Daily Trust, Business Day, Leadership, and then you can see a CBN record historic bank deposit after rate cut. Bank stocks rebound as low rates lift profit expectation. You can see here. So these are different news headline. You can see MTN Nigerian slides amidst negotiated block trade, first hold code. So these are different headlines from different sources. You can see right here, this Nairametrics right here. So you see different news headlines from different sources. Now, this platform does not post their content. Please, it doesn't post their content. What it does is to spool the headline. Now, the moment you click on the link, it takes you to the website. So we don't copy content. For example, CBN record historic bank deposit after rate cut. The moment you click on it, you can see it takes you to that particular source. So right here. So this is where you now see detailed information that tells you more about that headline. So we do not post content. You can see right here, there's no content. All we just pull is the headline and the source, the date, as well as the author. But when you click, it takes you back to that website, because we have to give credit to them. So we're not trying to be another business news. Rather, we are making it easier for you to access news that matters to you from different sources. You can see here, Naira hit 15-month high of 1,490 on black market amid low demand. So here, Tinubu's reform ending business reliance on CBN for Forex. You can also click here. When you click on it, it takes you to, you can see here, the nation. So the idea is we are bringing all leading business news platform on one place. So if you have a lot of money invested in the market, and then you have a lot of investment, you have businesses, you have stake in Nigeria, there's no way this will not solve your problem, because this makes it easier for you to see important headline. We're still improving on it. We're still adding more leading newspaper. But then the idea is to make sure that you don't miss out on the important business news for the day just by following this single page. So you can see we have all business headline on one single page. That's Glowfolio/today. You can go to glowfolio.com/today. So in moving your money, managing your money, investing in Nigerian stock market in 2026, understanding or being updated as regards what's happening in the market makes a lot of sense. So every morning you can come to glowfolio.com/today to see what news matters, the news that matters to you. So let's move on to the next part. Now, my top Nigerian stocks for 2026 are based on certain events. A lot has happened in Nigeria. A lot has happened, and a lot is happening. Now, when we see good news, we need to acknowledge it. We need to appreciate the government for that so far, even though they still have a long way to go. But then we still need to recognize the fact that at least some policies are working, and then we need to also give credit to the government and CBN for stabilizing the naira. At least many of us had expected naira to crash to at least 1819, but with CBN coming in with policies that enhances or brings in inflows into the economy, that's kudos to them. But I'm still worried because the source of that FX inflow is not a sustainable one. It's one that is not devoid of risk. So my selections of Nigerian stocks to buy are based on this macro trend. So let's quickly break down the macro trend that will drive the market in 2026, at least into mid-year next year. First one is stable effects from rising external reserve. Now, so far so good. Nigerian external reserve has moved into 42, $43 billion mark, which for me, it's not bad. At least that gives the CBN firepower to defend the naira when the need arises. And where is this source growth coming from? Improved oil and non-oil exports, as well as diaspora remittance. One of the biggest challenge that the government had to deal with early this year was Donald Trump's emergence as president, because the guy has already resolved to keep oil at the lower end of the market. That's why you see oil has been down for the most part of the year, and that's his policy. Baby drill, baby drill. So his focus is to pump more oil to make sure that oil is suppressed, oil prices are depressed. He believes that the bulk of US inflation is driven by energy. That if he succeed in keeping energy price low, then US inflation will be at least be suppressed too. So, and that's a risk for Nigerian market, because if oil price is going to remain low, how will the government generate more revenue to be able to fund infrastructure, to be able to fund its budget? So the other alternative was, okay, if you have to keep oil price at the lower end of the market, then well, let's focus on what we can control. We cannot control oil price in the market because it's based on demand and supply, but we can actually control our supply. So then the government had to move into ensuring that supply increases. So if you look at the supply volume this year against last year, I think we saw a marginal growth, so which has also helped to bring in more money from oil. But most importantly, non-oil receipts, non-oil exports have also been growing from other sources, and that for me is a major contribution to our external reserve. And somehow too, if you look at the bulk of reliance on dollar right now, a lot of consumer goods companies, after what happened in 2023 and 2024, have now resorted to alternatives. So some of them have reduced their reliance on imports. So rather, they are funding their supply chain. They are trying to adopt local sourcing, meaning rather than relying on foreign suppliers, they are looking at local suppliers just to cut down their reliance on reliance on imports, right? That's the FX. So the demand for FX from these guys, even though it's still there, has reduced drastically. So, and that's going to reduce the pressure on our reserve. So we'll talk about that later. Now, improved non-oil revenue surpassing oil receipts as a result of tax reforms. Now, we are expecting government to implement some of the tax reform next year. So, and I think that it's going to drive our non-oil revenue. So there are certain things I would also like to share with us later, as we proceed. Like here, if you look at what we have on Punch, yes, I think I've talked about this some days back. You see non-oil revenue jump 40% to 20.6 trillion naira. So if the government is able to implement its tax policies or reforms, then I think that might also support the growth in 2026. That's next year. Now, if more money is flowing to the government's pockets, then the need for government to incur more costs on borrowing might reduce. And that's why we are projecting lower yield on money market. What exactly is money market? So these are instruments that expires in less than a year. If government needs money today, they sell you treasury bill because they need to fund certain operations and all that. So if the government has more money coming from non-oil receipts. And these ones are not tied to borrowing. For example, I borrow 100K every month to fund maybe my personal expenses because I'm not earning much. Now, the moment they increase my salary, right, my borrowing will definitely reduce. Now, if I pay interest on that borrowing, I also want to cut down on my cost of borrowing so that I can at least focus on the revenue that is growing. So what the government is going to do right now is government might want to pay more attention to increasing its revenue without incurring more costs. That's it. And because of that, I see money market instruments dropping. And here, let's look at this trend. I want to show you something very interesting here. Lower yield on money market instruments signaling a shift towards monetary policy easing, with CBN lowering rates from 20 to 27% from 27.5. Did you know that the trend has been there since January? I want to show you something. The trend, I'm not surprised that CBN is actually cutting interest rates from 27.5 to 27%. If you follow our monthly webinar, let me show you something. I'm picking this from our monthly webinar. Now, pay attention to this part. Here, you see that from November, here, November 2024, rate on 364 Treasury bill reached a high of 29.65%. Now, down to January, the rate dropped from 29.65% to 27% in January. Can you see a drop? In February, it dropped from 27% to 21%. These are rates on 1 year Treasury bill. I want to show you the trend. Now, from 27% down to 21%. Now, from 21% to 19.45% offered in March. Now, from 94.45%, it went up marginally to 19.6 in April, but just an average of 15 basis points. Now, from 19.6, it went up to, you can see here, 19.67. Yeah, this is 19.45, 19.6, yes, 19.63. And then look at this is May. Now, let's continue again. Look at June. From 19.63, it dropped to 19.5 again in June. So you can see that from November peak of 29, we are seeing gradual drop. You see here. And in July, it dropped to 19.4. In July, it dropped to 19.4. And in August, we saw a massive drop from 19.4 to 17.44 in August. Did you see here? And then in September, which is the month that we are wrapping up now, it dropped to 19 point, sorry, increased marginally to 19.69. So you will see that why the rates had been looking like it's going up, going down. But over a 9 month period, the rate had dropped significantly from 29% down to 17%. So it was already obvious that the CBN is looking towards monetary policy easing right before it cut interest rates. So this trend acts as it lets you know the mind of CBN. That's why tracking data like this is very, very important. So even before the cut rate, I'd already been telling my guys that this is a trend. This is a trend. Like here now, and in our last webinar before this cut, I said we may see rates cool in 2026 as FG tax reform is expected to boost non-oil revenue flow, hence drive yield lower. This was our September webinar right before the rate cut. And you can see here CBN in its last meeting, that was before this last meeting, the previous one, CBN in its last meeting left rates unchanged, meaning when we had our webinar, the interest rate was still 27.5. Now, but going by the trend from from November down to date, it was already obvious what CBN was aiming at. CBN was aiming at cooling rates, but they don't want to make it, they don't want to do it overnight. So it started reflecting in the money market, the 1 year Treasury bill, because that's where you see a lot of people subscribe, put their money to. When CBN issues different market, different expiration dates, what happened? People go to the 1 year because it seems to be a lot more attractive. So rate trend was already giving us that sign. But we just needed CBN to cut interest rate and make it official. But already between November and September, it was already obvious that rates would go down. So I wasn't surprised that CBN had just dropped interest rate from 27% to 0.5% to 27% because it was already reflected on the trend on 1 year Treasury bill. And like I said, I already projected what will happen in 2026. So this is very important. So understanding this kind of thing would help you know. So, and that also explains the big rally that we saw in the Nigerian stock market. Because as rates are cooling, then money will definitely flow to. See, the truth is, this market respects what I call intermarket analysis. When rates are cooling, money will definitely flow from fixed income market to the stock markets. Because when rates go down, the physical market will not be that attractive again as it used to be. And then we now focus on that to price in or value stock when you value stock using a lower rate, their fair value is always higher. So that's for one hand. Now, on the other hand, when rates is increasing, people move their money away from stock markets back to the fixed income market. So you will see that some of the reason why we've seen massive uptick in Nigerian stock was the dip. You can see gradual dip in yield on Treasury bill. So this was already telling you that CBN is looking towards monetary policy easing. So you don't have to wait till CBN reduces interest rate before you know what their mind is. By following trend, I share this every month. For those that have joined our monthly meeting, I share this every month every month. So, and into 2026, I do the same thing. So that when we look at this rate trend over a 3 year, a 3 month, 3 month, a 4 month, 5 month, 6 month period, it's able to give us an idea of what is in the mind of CBN. And the major market mover is Central Bank of Nigeria. If you want to be profitable in Nigerian stock market, you cannot ignore the place of Central Bank of Nigeria. They are the one that moves the market. They are the one that moves the market. So you must be able to track data that tells you their mind. So when you know what they are thinking, then you can easily align your portfolio. For instance, if CBN had been increasing interest rate from 29%, 30%, 31, 41, 51, you know CBN is turning towards monetary policy tightening. And that is not good. That is not good for stock market. And just stock market would have crashed so hard because people would prefer to move their money away from stock into fixed income market because rate was increasing. But now you see that as rates are dropping, then most likely money will flow to the stock market. So this is one of the major reasons the stock market went up, coupled with FX stability. So we move on as we talk about that. Now let's look at other trends. Improved oil output and stability returns across oil and gas installation. Like I told you before, yes, if the government cannot control market price, then they can actually find a way to increase output. So here we say that improved stability, that and stability returns across oil and gas installation, helping to offset the risk of lower price. So this is one of the reasons why we saw improved oil receipts. So you might ask yourself, how is revenue from oil going up when the price of oil is down? Is because the government has invested a lot in trying to increase oil output. Now, cost of borrowing is expected to moderate. So supporting lower finance costs. I'm just letting you know some of the macro trends that I think will drive the stocks in 2026 and how to position yourself. So cost of borrowing are expected to moderate a little bit. Now, don't forget that before now, a lot of companies have been battling higher finance costs because of rate hike. So now that the CBN had dropped interest rates, well, I still want to see what October Treasury bill will look like, November Treasury bill will look like, and December into January, February, March. But if they continue to go down, which I think it will happen because right now rate has dropped, then it means cost of borrowing. So if any company has been battling rising finance costs, the best they can do right now is to sell commercial paper. Some of the strategies some of this listed company adopt is they sell commercial paper at a lower rate to pay the one that was expensive. So when you see a company come to the market to sell commercial paper, don't think they are doing that. Some of those commercial paper are not just borrowing. Some of them were designed to pay the existing or maturing debt, especially those ones that are quite expensive. So you can use a low yielding or low cost commercial paper to pay a high cost commercial paper. So cost of borrowing are expected to moderate, hence support lower finance costs. So this is critical for me here, and I'm going to stress this in the next company I'm going to talk about. So if you are going to pick one company that will benefit from macro trend in 2026, it has to be a company that will benefit from lower cost of borrowing, lower finance cost. This is extremely important. This is extremely important. Now, inflation may moderate, which as we've seen, Nigerian inflation has dropped to 20-something percent as FX stabilizes and energy costs steady. So we've seen what's happening recently. Dangote refinery decision to supply its buyers or bulk buyers, consumers directly, and then bypass the whole middleman of a thing. I say this, and I've said this in my few discussions, that this is good for consumer goods company. This is good for consumer goods company, especially consumer goods company that is selling at the bottom of the market. Doesn't mean you just jump into consumer goods company to buy. A lot of consumer goods companies surge higher this year. Some of them are already overpriced, overvalued. So it is the consumer goods company that is cheap that I'm looking for. So two things. One, stability in FX, which I think would help moderate inflation, as well as energy costs, plus lower finance costs. So any company that has been battling increase in finance costs, as long as sales is going up, that company would definitely do well in 2026. Especially if it's a company that is still emerging, especially if it's a company that has huge upside potential, huge upside potential. So when you're buying stock, please focus on this core trend, because everything that is happening in Nigeria right now, they all are wrapped up under this cost of borrowing, because at the end of the day, cost of borrowing is dropping. The rates that the government pay you on your 364 Treasury bill, there is a cost to them. So, and that's the rate that drives other markets. Now, CBN itself has reduced interest rates. That's also cost of borrowing, which means going forward, TB rates will drop. If you go to your bank, interest rates will drop, whether rates on borrowing or rates on savings. So all the rates in the market are going to drop. And the big effect of rate drop is that cost of borrowing is going to moderate a little bit, at least. So if I'm going to be picking a stock, I want to look for a stock that is being driven by costs of borrowing, finance costs. And with this recent trend, it means that it's going to be a major catalyst for them. This is the single reason why Dangote Sugar is a must in 2026. Dangote Sugar is a must in 2026. I was not surprised when I saw it as a top gainer yesterday. This is a stock that will do well. And I want to take my time to analyze Dangote Sugar stock by looking at each of these core items, reasons: improving revenue, moderated finance costs, stable FX, fastest bottom line growth should support a quick swing back to profit, hence drive stock price to retest the 89 naira high. So let's look at Dangote Sugar. So one of the stocks that I'm buying for 2026, that I'm holding steadily for 2026, is Dangote Sugar stock. Dangote Sugar. This is one stock that did not, yes, we had entered Dangote Sugar earlier on, around 30 something naira, and Dangote Sugar is selling for, just like we entered Unilever at 15 naira, and then it went high, and it was still a stock to buy for 2024, 2025. Now, Dangote Sugar, we entered Dangote Sugar around 38.40, and then the stock had rallied from that period into 75 and all that. So this is different from the earlier call. This is we looking at the company and say, now it's time to buy the stock again. So what I usually do for me is that I have a separate New Year portfolio. All the stocks I recommend for the New Year, all the stocks I think will do well for the New Year, I buy only that stocks in that portfolio, and then I leave them. So it's different from the other portfolio, whether I've been holding them before. So if I've been holding Dangote Sugar from 38, it is different from this New Year stock that I'm looking at right now. So if anybody is coming to tell me, oh, the recommended price, this is like a fresh stock right now for me. It's a fresh stock. So even though my existing holding is up, but I'm looking at this relative to, so I'm looking at all these stocks I'm recommending now, they are relative to what I think will happen in 2026. So it means that whatever price they're selling right now, I am going to treat that as a fresh price. So if we had entered before in our other portfolio, fine. And if you want to top up on your existing portfolio, it's okay, it's fine. But these are the stocks I think will benefit. So one of them is Dangote Sugar stock. Dangote Sugar stock is selling for 59 naira. I have no doubt these guys will retest 89 high. This stock will retest 89 high. And let me share some of the reasons why I am very bullish on this stock. As it relates to macroeconomic events, don't forget, I don't just recommend stock out of the blues. I look at macro event that will drive the market and then focus on stocks that will benefit from that trend. This is Dangote Sugar. Yes, it closed 10% yesterday. Cool. Yes, it's possible that a lot of people are seeing that opportunity in the market and that it cannot continue to be on full beat till the year end. That's why you see, I like to buy a stock into that new year. Do you understand? So a smart person does not wait till the end of 2025 to be able to plan for 2026. In just October, November is enough for you to plan for the new year. Some of us, our year ends is in September, October, meaning at the end of this month, September, October, we start reshuffling our portfolio ahead of the new year. Why? Because we do not want to buy when the major investors, when the big four managers have already reshuffled. We like to reshuffle before that. They usually reshuffle at the end of the year. At least most of them, their financial years run from January to December. So for me, I'll rather reshuffle before the end of the year so that the stocks I know they'll be buying, these are the stocks I will be jumping on. Let's look at Dangote Sugar stock. So I'm going to do a quick run on both the Q1 and the Q2 results. And I want to pay attention to one line item here, just one line item. One line item, very important. So this is the first quarter result of Dangote Sugar. Yes, this is the first quarter result. Now, although this company is still has not turned profit, that's why I like it. That's why I'm excited. It has not turned profit. So if I see the trend that is most likely going to help this company swing back to profit, I jump in because if the company turns profit, then the sentiment will be very positive. You see media, news headline, Dangote turns profit again, Dangote Sugar, and then you see FOMO will start driving it. The question is, are you in the stock now? So let's look at Dangote Sugar Q1 results. Now, when you look at Dangote Sugar Q1 results, first thing you see revenue 122 to 213. So you see that despite all the whole increasing cost, FX pressure, blah blah blah, the company has maintained steady increase in revenue. So to 122, and then you see gross profit 8.7 to 9, which is not bad. And then you see operating profit dip because of rising costs, administrative expenses 3 to 6.7. And then look at this part here. This is where I find interesting. Finance costs in Q1 2024, finance cost was 122.5 billion, and the finance cost dropped from 122 to 29 billion. When I saw this, I know something is working. I know something is happening. Something is actually happening. You see, it is not enough to just jump and say, oh, loss in the company. No, you have to look at it line by line. So my major line item on Dangote Sugar is finance cost because this is the source of the problem. Finance cost was the major source of the problem, as well as cost of sales. Cost of sales and finance cost. So you see, on Q1, we saw a massive dip on finance costs. You see here that despite the drop in operating profit, this finance cost of 122 billion, which dropped to 29, helped to narrow the loss from 106 billion down to 22 billion. You know, when you are investing in the stock market, you must define your personality. Are you in the market for growth or value? If you're in the market for growth, when a company reports a loss, it is not enough for you to walk away. You need to compare if that loss narrowed or widened. So this is a narrow loss. From a loss of 106 down to, and then you can see loss for the period 68 down to. So when I saw this, even if it was not totally impressive, that was a reason why I should hold Dangote Sugar from 2024, so 2025. So apart from the fact that we had keyed in before this result because we understood the interplay of demand and supply, I saw institutional buying. You can go to portfolio.com to see my analysis on Dangote Sugar. I had already talked about that stock and the influx of buyers. So if I find massive buying volume with no news, and my chart is telling me that something is happening here. These guys are privy to insider information that we don't know. So when they start buying a stock, I need to move in. And that's what I teach in my ETC section, how to spot buy signal that precedes market rally. I teach that in my ETC section every now and then. By the way, next month our ETC is starting. For those that have prepared for the ETC and have paid for the ETC class, we'll send you an email and then we get started. So this is Dangote Sugar. This is Q1. You saw what finance costs did. A massive drop in finance costs helped to narrow its loss. Now let's move to Q2 again. Now on Q2 results, what happened on Dangote Sugar stock? Revenue 172 to 216, gross profit 9.3 to 42. Now you see that cost stayed 163 to 173. So you can see that cost went up marginally, but not as high as sales, which is why you saw gross profit shoot higher from 9.3 to 42. That's in Q2. Now in 6 months, 18.1 to 15, 295 to 430. That's half year results showed massive growth in sales. And then look at operating profits from 5 billion in 2024. That's Q2, 3 months ended in June. From 5 billion to 35 billion. From 5 billion to 35 billion. And then look at 6 months from 10.3 to 38. 38. So you can see the single quarterly operating profit result here helped to cover up for that dip. For that dip we witnessed in Q1. Can you see that? Now, if you look at operating profit in Q1, right here, look at 5.2 down to 2.7. 6 months, 5.2 down to 2.7. Can you see here? So which means operating profit in Q1 dropped. But in Q2, we saw a massive recovery, even up to 6 months, from 5 billion to 35.3, and then in 6 months, 10.3 to 38. This is the same line item that dipped in Q1. Now, look at finance cost again. Finance cost dropped from 111 billion, 0.6 billion down to 35. Look at how finance cost is dropping. Look at how finance cost is dropping. And then from 234 in 6 month period down to 64. Look at the massive drop in finance costs. So it is not surprising to see how this drop has helped to lift the company, that on a quarterly basis, it turned first profit. It turned profits. So in Q2, Dangote reported a profit before tax of 520 million from a loss of 104.5 billion. Now, in 6 month period, that loss narrowed significantly from 211. Imagine a company reporting 211 billion loss, and that loss dropped to 22.1 billion. Look at the recovery. I don't know if you can see the recovery, how fast the recovery is. That even if the company still reported a loss in Q2, compare the loss in Q2 2025 to the loss in Q2 2024, from 75 billion naira loss down to 626 million. And then in 6 months, from 144 billion naira loss down to 24. This is a company that is clearly on a path to profitability, on a path, less like a turnaround. And then when you now combine this with the current macro trend, which is what? Lower cost of borrowing. Lower cost of borrowing. Like I told you, this is my theme for 2026. Any company that will benefit from lower finance cost is a buy, especially one that is emerging from the bottom. So we saw improving revenue. We saw moderated FX. Let me even show you something interesting on the FX line item. You know, Dangote stock suffered from FX naira devaluation. And then with the stability, how is the company benefiting? Let's quickly look at note 10. Let's look at note 10 in our book. That's in Q2. Let's look at note 10 quickly to see how this company is well positioned to. Yes, this is note 10. Now, can you see the first line item here? Exchange loss in ordinary course of business. Now, in 2024, can you see here? The company reported a loss of 193. That's on 6 months. And then the full year, it went to 208. This is the loss booked for 2024 from January to December, and this is the loss booked for 6 months. 193. Now, 6 months 2025, sorry, 2024, not 2023. 6 months 2025, this loss reduced from 193 to 160 million. From 193 billion booked in 6 months 2024 down to just 160 million. Why? Because of FX. Because of FX moderations, stability is supporting this recovery. So, which is why finance costs dropped significantly from 234 billion in 6 months 2024 down to 64.9. You need to be specific on certain growth driver before you can say a stock is a buy. Now, look at the growth in bottom line. That's another interesting thing I love about this stock. Look at the growth in bottom line. Let's quickly look at the result again. If you calculate the growth, the percentage growth from, let me go back to, yes, look at the percentage growth from 104.5 billion to 523 million. Do you know what percentage growth is this? Do you know what percentage growth is this? That's why I said fastest bottom line growth should support fast bottom line growth. That means the rate at which the bottom line is growing to support quick swing back to profit. And the moment Dangote Sugar, based on this current macro trend, report profit, I have no doubt that this company is going to retest 89 naira high. First, this is the 89 naira high. 89. So I'm not surprised. I won't be surprised if this company retests this previous high first, because as it is now, that's a major key level to target. That's a major key level. And then if this continues in 2026, then the company might even surpass 89 into 90, 100. So that's why Dangote Sugar is a must buy in 2026, a must own before 2026. So look at how you can take position. Look at how you can position yourself in a company stock based on macro trend. So when institutional investors are reshuffling their portfolio and they are see this data, they've seen it, they even know more than me. See, whatever I'm sharing here is just 0.000% of their own knowledge. These guys invest in data. So they'll see this. Even like I said, I think like them, I take decision like them. So you must see the biggest advantage you enjoy in the market today is ability to see the market like an institutional investor, even if I don't command that kind of capital. The last thing I do is to be looking at news. The only thing I do when I look at news is to find new macro trend, new update, new opportunity. But I'm not looking at news to find companies to buy, because any company that is being mentioned on media today is a late entry. It's a late entry. So before these guys swing to profit, take position on Dangote Sugar stock. Very important. Take position on Dangote Sugar stock. And the key line item here is moderated finance costs, which align with CBN current policy. That's what monetary policy is in, reducing interest rate. Look at the trend. Look, this drives finance costs. This is it here. TB has been moderating. So that's a sign that look at where this economy is headed. Look at it here. Look at what the government is thinking. And for the fact that the government is even looking to make more money from this tax reform, then it means cost of borrowing might go down further. So any company that is battling finance costs might find opportunity, might probably breathe a little bit. At least that's a sign of relief for them. That's where Dangote Sugar stock is coming in right now. I have 3 other stocks I've posted on Glufolio as I speak. So once I end this video, I'm going to post it immediately. If you want to get the 3 other stocks I'm buying for 2026, quickly go to glufolio.com/subscribe. This is the best time to mop up my top 4 stocks. In 2025, I recommended 6 stocks. This is it here. And like I said, they are transparent. I'm not trying to hide anything. They're on the platform. People that join my community can see their performance. Now, I'm not saying the new one I would recommend will deliver the same performance, but the strategy that I used to pick this stock is still the same thing as the one I'm recommending right now. They are stocks that are benefiting from macro events. So first stock is Dangote Sugar. Second stock, third stock, and fourth stock are on Glofolio platform right now. So once I end this section, I'm going to post it. I'm going to click publish. It's been posted already. Just want me to publish it right now. So you can quickly go to glofolio.com/subscribe to mop up immediately. So if you want to catch my hottest stocks benefiting from macro trend in 2026 right now, go to glofolio.com/subscribe. Pick a plan that works for you. In October, I'll be talking about the stocks, more about them, actually in our monthly webinar. If this makes sense to you, kindly hit the subscription button and turn on the notification bell so that when I release important videos like this, you'll be among the first to get notified. So, like I said, Dangote Sugar is a must next year. And if you want to profit from the Nigerian stock market, this is a must-have in your portfolio.